Good morning, everybody. How are we all doing? Happy Wednesday. Welcome to the member stream. Is anybody there? Can't see anybody in chat. Don't know if there's anybody there. Morning. FTNet's here. Good. At least there's one person here. That's always good. This morning we're going to go through the look at the indices. Wow, that was a big jump up on the FTSE at the open and the DAX. We're going to look through the indices as usual. Look at the news because I wasn't here on Monday. And somebody's asked to go through the fundamentals. So I'm going to do a stream on that because the old fundamental trades website that I had up and running kind of died a death, but it's still being found and people are still going to it. So I'm going to have to shut it down. But I've been working on a new version basically with somebody else, which is going to be going live probably in the next couple of weeks. Which is going to have very much the same data on it, so a scorecarding system. So it'd be a good opportunity to go through the fundamentals and see how they affect the markets. And also we're going to look at ways to sort of get an edge out of fundamental news, more long-term than your typical sort of straddle trade, try and trade the actual news event. More looking at what happens after the news event and seeing how you can get multi-day moves out of fundamental news, only when we get really deviations. So we'll go through all of that basically. So markets opened, obviously we've pushed up. I'm just going to quickly cover the FX side of things first. We've got some movement. Finally, morning Leon, morning Wozciak. We've got some movement. So I've actually banked some stuff, look. P&L. We've actually had something that's moved, which is phenomenal. This market is still quite sideways, but we have had some decent movement, mainly in the pound. So as you can see, I banked my euro pound. I think I posted that in the Discord channel. But I just got out the remainder of this euro pound, basically, which I was in for, I don't know, this 7th of May. So, it's a good month I've sat in this thing and it's just done absolutely nothing. So I decided to get out. I banked it, not that one, banked it there. And I banked those two. Sorry, not that one either. Banked that one there and that one there. The remaining three, I basically took an almost break even on them, which was this 25 measly dollars. But as you can see, the reason for that was swaps, because I was holding it for an entire month going absolutely nowhere. It's actually eaten up all the profit. So swaps, this is the problem with swaps. This is why we have the swap filter. You can see that the swap on that is 640. And you can see how much impact that has over a month. Obviously, it's a big consideration now, swaps. So banked that. Aussie New Zealand has banked this morning. So that's hit target. That was a nice in and out, fairly quick and easy one. Say quick and easy. This is quick for this market. So 2 entries, nice 3-bar reversal there before the reversal alert went in. So first entry, second entry, exit 1 ADR. So that's gone in the bank this morning, just at the high from Monday. Everything else is kind of just sitting there still. So I've got Aussie US on. Which I've been sitting in now for a week, not going anywhere. Swiss yen, I've got on as well. Again, took that one 3 days ago. It's pushing up a little bit. So, it's got just not any movement, is there? I can't even get 3/4 of an ADR of movement to get a second position on a lot of this stuff. It's just not moving. Euro CAD, I've got that one on short, 2 positions. As you can see, very, very, very sideways. I've already banked on it, very much like the euro pound. And it's just not going anywhere. I can't do anything with it. It's literally sitting sideways on my break even. This market is utterly shocking at the moment. I've never seen anything like it. This is the most sideways market I have ever traded through. And as you can see from this one, it's contracting. I didn't think you could contract any more than we are, but look at it. I mean, it's at the point now where the ADR is going to revert to zero, and it's just not moving. It's flatline. It's awful. But there's nothing we can do about it. You have to sit through this. Very weird market at the moment. Euro Swiss, got a single on that one. And again, same thing. So I've got into it on Friday, short. It moved down by half an ADR, back up half an ADR, down half an ADR, up one ADR. We're down half an ADR today, not going anywhere at the moment. So TP on this was down at these lows. If we can get a push up into the monthly high, which is where I'm hoping we get to today, there'll be a second entry going on that, which will bring my average up, which means I can target this propulsion gap to the downside as my exit. That's the plan. Euro pound I'm out of. I don't want to get into that at the moment. Pound US dollar, I'm still short. So obviously we had the news, which we'll cover in a second, yesterday for the pound. It did a V-shaped recovery on it, but it did drop again, and it looks like it's dropping further this morning. We've got Rachel Reeves coming out with a budget kind of readjustment, if you like, this afternoon. So there's potential for more movement on the pound today as well. So my average is down here, which is 125 ADR. So good couple of days of movement back down into that propulsion gap, and I'll start to bank some stuff. But this is absolutely awful, this market. I have literally last week, I did not bank. Nothing moved last week. There's literally nothing I could bank. I haven't had a 0 week. I can't remember the last time I had one. Just doesn't happen, does it? Because there's always something moving. As long as you've got exposure on, you're always going to get out of something. But very bizarre. Anyway, so pound US dollar, I can start to bank on this now, but I'm going to let it go today because we've got Rachel Reeves talking. ADRs, there's nothing today. There's no weekly ranges hit. Surprise, surprise at the moment, because we've not moved this week. We haven't moved this month. So there's no monthlies. There's nothing to look at. There's no opportunity. It's just flat. Pound CAD is your only thing you can get into today at the moment on the 4 hour, which is nicely extended to the downside, and the pound is on a collapse. So probably not the greatest thing in the world to try and long at the moment, but it is a setup. So if you do want to take it, that's your only opportunities at the moment. You're looking for a pushback like that. Got these lows coming up at ADR, and then you've got your monthly low, which is 200 ADR. So initial entry when we get some kind of strength, and you've got 1, maybe 2 scale-ins before we get down there. And then obviously if it's got all the way down to that monthly, we got that lovely big move, which will get that pullback on. So yeah, terrible. Honestly, it's the worst sideways market I have seen forever. It's just awful. But anyway, it'll change. We're waiting for Trump, I think, to sort his life out and tell us what he's doing with these tariffs. So we will see. Long on the DAX, no trade FTSE. As you can see, the reason there's no trade on the FTSE range is within parameters. But as you can see, when that candle closed, open of the candle was back up. So we gapped up above, well, with the spread, you're gapped up above the close of the previous candle. So the EA will not take a trade in that instance because it will have to place a limit order. And obviously, if it does pull straight back down from there, that limit order triggers and you get an instant stop out. So it doesn't take those trades. So we're waiting for this candle to close, and then we'll get a range break of that. We've got a gap up as well there. Very weird markets at the minute. We've had a nightmare this week on ORBs. It's just been chop, chop, chop. As you can see, 1,600 loss yesterday, which I'm recouping hopefully today. If we can get some movement, this thing is just not breaking out. Nothing is moving at the minute. The market is so unbelievably choppy and sideways. Nice short trade there on the DAX yesterday. But, you know, it's been a lot of chop, especially the US markets yesterday. They were terrible. That was your open yesterday. And then we looked like we were going to break down. We literally had 5 minutes of price action, followed by 10 minutes of undoing the price action. That's it. That is all you got yesterday. You had to wait an hour for it to just do that for 15 minutes. That's all you got. Just bizarre. I don't know what is going on with these markets at the minute, but they are not normal. We had an instance yesterday as well where we had we had real divergence across the indices as well. The DAX was having a terrible day, and the US indices were not. You know, it's just, everything seems out of sync and out of whack. Something's not right. It's one of those things where, as a trader, when you've been trading for such a long time, when you get these things, these types of things, you look at it and you just go, that's just, something's not right. Something tends to happen. You tend to get something big suddenly happen for some reason. And it just feels at the moment like one of those periods where we're like, something's just not right here. So we will wait and see. Stopped out on the DAX. So initial ORB, straight down, stopped out. Come on, let's get some movement. Look at it. Gapping all over the place. Not fun, is it, at the moment? Anyway, so they're your ADRs, RSIs, etc. This morning, there's not a lot particularly exciting to look at. The opportunities-wise, I'm out of Aussie New Zealand. I do not want to take a short on it at the moment. I just want to, while it's doing this, I just want to sit and watch what happens next. Aussie US, I'm already in. Swiss yen, I'm already in. Euro CAD, I'm already in. Euro Swiss, I'm already in. Euro pound, I've just got out of. I don't want to get into that until we've had Rachel Reeves's sort of monetary policy, if you like, adjustment to do with what they're going to do with spending on defence and all that sort of stuff, because it may affect bond purchases. So if there's a massive increase in defence spending, they're going to need to fund that, which means there may be a bond purchase, which means the pound could really rally. So I'm just going to wait until that happens. But at the moment, obviously, we are breaking out on the euro pound. So I'd be interested in longs back down in propulsion, potentially, on a weakening pound, or mean reverting when we get back up to the monthly levels there. So we are extended on the hourly at the moment, or we were. So there is a potential short opportunity here, but with news about to hit, not really interested in taking it right now. Pound US dollar, I'm already in as well. So I've got nothing else really I want to get into. So if there's any other pairs you want to look at this morning, let me know, and we will go through those. News-wise, obviously we weren't here on Monday. There was no news on Monday. It was bank holidays everywhere, so it was a dead day for news. Yesterday, there was no news either. We had the claimant count change come out at 33.1. Unusually, for the claimant count, that sent the pound into a freefall. But I'm not sure personally whether the market was using this to sell off some pound ahead of Rachel Reeves's announcements today. So it looked like the claimant count sent the pound spiraling, but it doesn't normally. It's an orange news event. It's not unemployment, and it doesn't usually have that impact. So I think this is just the market using the news to affect their trades that they wanted to do, which was reducing their pound exposure. So that was yesterday's news. Today, we've got 1 hour before the market opens, we've got the CPI for the US dollar. That is forecast to have gone up. So inflation going up, we'll cover all this in a minute when we look at the fundamentals in more detail. But inflation up generally is bullish for currency. So we are expecting that. This is the reason that Powell is not dropping interest rates. This is the reason that Trump is cross with Powell, because he's not dropping interest rates, because he's doing exactly the right thing, because inflation is heading upwards, which means you don't do that. Trump is wanting that done because he needs spending to encourage business, because he's promised the world growth and he's not getting it. So that is basically potentially bullish for the US this afternoon. If we get these numbers, if it comes out any higher than that, we're going to see a nice move in the dollar today. We got the pound GDP on Thursday. I suspect we might get some movement out of that today anyway. I'm just going to see if they've put that in the calendar. No, she's not in there. So, yeah, we'll see what happens with that announcement today for the pound. But GDP tomorrow expected to go into negative. If you look at the previous GDPs, we've done pretty well. So this is just kind of a pullback, if you like, a rebalancing of GDP. Morning, Lucas. So that's can potentially have a big negative impact on the pound. Obviously, if this doesn't come out at a negative 0.1 and it comes out at 0 or above, then it will probably have a nice bullish move. But at the moment, we're expecting the pound to drop. We've had negative news. We're potentially going to get something today from Rachel Reeves as well. So it's going to be potentially downward spiral for the pound, which is why I'm not really interested in buying at the minute. PPI tomorrow for the dollar as well, and the unemployment claims. And then we've got University of Michigan on Friday. So that's it, really. So it's literally dollar this week. As you can see, we've had no news Monday, no news Tuesday. It's dollar, dollar, dollar with a little bit of pound in the middle. So it's all about the dollar this week, and it all kicks off this afternoon. So we'll see where we go with that. Gapped again on the FTSE, look. So we've gapped down, and then we've just gapped back up again. There's absolutely no liquidity in the FTSE today. DAX looks like it's going to trigger long again. Really not able to do anything, this market at the moment. It's really sort of jittery. I can't quite explain it. It's one of those things, like I said, you just get a feeling there's something not right here somewhere. It just doesn't seem to be able to kickstart itself in any way, shape or form. It's literally, there's a big order goes in and that's it. Nothing else happens. There's no retracements on it. It's just very weird. We seem to sit around for an hour at a time, literally with nothing happening. Inside bar after inside bar. It's just indecision market in a minute. Anyway, who knows why? Right, so this morning we're going to look at fundamentals. Morning, Mark. I think still a bit after having my cold thing on Monday. So if I keep going for water, that's why. So fundamentals we're going to cover this morning in detail and look at basically how fundamentals affect the forex market specifically, and why fundamentals are so important. So we're going to look at all of that in a little bit more detail, and look at potential ways that we can use fundamentals for medium to long-term gains. So this is something that I do not as regularly as I used to, but I do take the odd trade every now and again. There's a good example of one that I took on the pound here, this pound short, yeah? So this pound short that I took was not a mean reversion trade. Yeah, it is there. Yeah, so that trade there was my first entry, yeah? So it's a breakout short. Yeah, normally I would be long in RSI extensions as a mean reversion trader, but this was a news trade. And this is an example of the type of thing that I'm going to talk about today. How fundamentals, when you get an unexpected news event with a high deviation from forecast, it tends to send the market into multi-day moves because the market has to readjust itself. This is an example of one that didn't work out. So what you would do is you would either take it with a stop loss or you would take it with no stop loss and close it after X number of days. So it's an in and hold type strategy. In my case, I turned this one into a position because I was expecting a pullback short. We didn't get that either. Obviously, this is because of what's going on with the dollar at the moment. So fundamentals are slightly less effective when you've got something like trade wars happening with Trump. But that's an example. So we're going to look at ways that we can use the news to dive into multi-day hold positions. Typically, what people tend to try and do with news is they look at the news event coming up. So we got CPI at 130, and the typical news strategy that you'll get taught all over the internet is you go down to a 5-minute chart, a 1-minute chart, or a 15-minute chart, and just before the news is about to come out, you put a straddle trade on a range. Yeah, and you assume that the news is going to take it parabolic, and basically what will happen is you'll get in one direction, you'll cancel the other order, that will fly, and you'll make an absolute fortune. What happens in the real world is you straddle that range or whatever range you want to decide on, whatever time frame you're deciding on, and then just before the news, the broker spreads the market crazily, triggers your long. It pops down, it triggers your short, it comes back to where it was. The news event comes out and it flies in one direction or the other, taking 2 stop losses with you, and you won't get honored on that stop loss because they'll spread it out and you'll get twice as much stop as you're expecting. That's really what happens in news trading. Until you actually do it for a while, you think this is the best thing since sliced bread. It makes total sense. If there is going to be a parabolic move, obviously I can't lose on both of them. You lose on both of them a lot. And basically, you never get the price that you want out of news trading. So this is not the way to trade fundamental news. Somebody approached me over the weekend and said they wanted an EA built, which trades the 1 minute chart with one cancels the other order. And they wanted to put in news times so that they could trade basically news. So they would every morning put in when the news events are coming up. And what it would do is 1 minute before the news, it would find a range, it would straddle it, but it's just going to get stopped out constantly. So that isn't how you use it. Best way to trade news is to see what the deviation is on the news and go with it. Yeah. So if we are expecting, for example, here, a minus 21.2, and we are forecast to get a 9.5, and we actually get a 33.1, which is like 20,000 people more than forecast, claiming benefits, basically, i.e. being unemployed, that is bad for the currency. Yeah. So you go for it. It's red. You go for it. So you short it and you hold it short. So that's the best way to trade it. But you don't get in with a tight stop loss and try and get a 51 risk reward out of it. Yeah. So we're going to look at how to do that, but more importantly, why the market moves. So this is my old fundamental trades website. So I'm just going to quickly go through these key news events. So obviously, when you look at Financial Juice or Forex Factory, we get the main news events. So I filter my news events by orange and red, and I get rid of the yellow. So there's two main types of news. You've got leading indicators, which are things like inflation, interest rates, GDP, unemployment, etc., etc. So these are leading indicators, are what the banks and institutions use as a gauge for what is going to happen in the future, which is why they're called leading indicators. So they are leading where we think price action is going to go. So if the interest rates go up, it means that there will be more interest in purchasing that currency, therefore the currency will rise. So if an interest rate decision is expected to be an increase, we lead it, we go with that. And if it comes out as forecast, the market should do that. So anything that you see in red or orange is either a leading indicator or a high impact indicator, meaning that it is something that the market pays attention to and it uses in its main scorecarding system. So just to quickly explain what scorecarding is, if you don't know, this is an example of a scorecard. What scorecarding does is basically it attaches a weighted number to specific news events and, more importantly, deviations on those news events. So, for example, this is an old one. It's not been updated for ages. So it's just an example. But interest rate is at 4.35 and the CADS is at 3.75. So this would have a higher weighting than this one because it's higher, meaning higher interest rates attract more funding, which means that it is bullish for the currency. Lower interest rates are more bearish for the currency. If an interest rate has dropped, that is bearish. And if an interest rate has increased, it is bullish. So in this case, for example, you might allocate a 2 if it's higher than that one. And that can give that a 1. If it's a negative interest rate or something below a 0, you might give it a negative 1. If the interest rate hasn't changed, you will score it at 0. If the interest rate has dropped, you will take a negative 1. And if the interest rate has gone up, there aren't any there. But if the interest rate had gone up, you might class a +1 to that. So what you get at the end of the day is once you've topped it up, all of the important main leading indicators and their differentials, which is the difference between the previous number, and also the differentials of forecast. So if we were forecast to go up by 1% and we went up by 0.5%, there's a differential of 0.5%. When you add all those together, you'll get a number. So you might get a 6 there, a 4 there, a 2 there, a 9 there, or whatever. Yeah. So you just basically get a scorecard, which means that that is more bullish than that. That's basically what it means at the end of the day. So if you were looking at the euro being a 9 and the Swiss being a 2, you would buy euro Swiss because the euro is expected to be strong. The Swiss franc is expected to be weak. This is what banks and institutions do. And this is what analysts in banks and institutions are paid to do, is analyze the fundamentals of individual countries and give them a weighting, give them a scorecard. And they use every single news event that you see listed here, Morning Ace, and more. There's more than this. This is just what we see. There's things like M2 money supply and things for the US, which are leading indicators as well, but they're not included here because they're quite stable, but they are important. So everything you see in orange, like bond auctions and things, typically has very little impact because usually there is a set amount released and a set amount purchased. Every now and again, you will get an increased bond auction, which is what the Europeans did. When we had that massive euro spike, basically Trump turned around and said, we're not going to fund Europe anymore. We're not going to help with you militarily to deal with Ukraine. You've got to do it yourself. So Europe suddenly went, crap, we need to fund an extra 15 billion. So they sold a load of bonds. That increases the revenue into that currency dramatically. So normally that doesn't happen. So these are yellow news events, but every now and again you'll get one that is different. Yeah. So you still have to keep an eye on them. And these numbers will be in the bank and institutional scorecards. So if we go back to some, like, oh, there you go. There's M2 money supply that I just talked about. So that's the Japanese version. So the reason these are yellow is because they're not leading indicators, but they do add up in the scorecard. So you got a 0.6 on a 0.6 forecast. You got a 2.7 there, and they got a 0.2 for the pound. But it's the retail sales monitor year on year. We're not really interested in what the difference between retail sales this year is and what it was last year. It's a historical news event, and it's not really going to have any impact on retail sales next month. So therefore, it's not leading. Therefore, we don't pay too much attention to it. But it's a general gauge of whether it's going well or whether it's going badly in the UK. So it goes into the scorecard, but it gets given a very low weighting in the overall scoring. Yeah. So that's how fundamentals basically affect markets. And the reason they affect markets is because this is how banks and institutions decide on how they're going to invest in pension funds, in certain stock sectors in certain cases, and how they are forecasting where forex currency pairs are going so they can plan their purchasing. So like we've talked about many times, banks and institutions cannot drop huge orders into the market in one go. They have to break it down into very small increments, and they pop that into the market, wait a little bit more, they pop another bit in, and they wait, and they keep adding more and more of the size they need to execute into the market. The scorecard gives them an idea where price is going to go. So it gives them an idea where's the best place to try and get those transactions conducted so that they can drive the market to the price they think it's going to go at. And they can use other orders, speculative orders, to make money along the way. Yeah. So this is why fundamentals are so important, specifically for Forex, because they give us a guide as to which way the market's going. If we think interest rates are going to go up, you'll find the dollar will typically rise before the interest rate decision, which is the market factoring in the fact that we are going to get interest rates rising. If the interest rate decision comes out and it's not what was forecast, that is when we get that massive move in the market, which is called a deviation. That is a deviation. We were expecting the claimant counts to come out at 9.5. It came out as 33.1, much worse than expected. Pound collapse. Yeah. So if you get a news event that comes out on forecast, what it means is usually the market has factored in what it thinks is going to happen. And if it gets that exact minus 0.1, for example, on GDP tomorrow morning, it will probably not do a lot. You'll get a little bit of that, but that's it. Because there's no reason for the market to drive strongly in one direction or the other, because that's what we're expecting. Yeah. So if that comes out at a plus 0.2, the market will go, holy crap, we did a lot better. Therefore, it looks like the economy is going well, which means that there'll be more investment and the pound will rally. So if you get a deviation, that is where you get the big moves, which is why sometimes you see the news events coming out and the market doesn't do anything. Yep. So this afternoon, for example, we've got the, let me just get rid of these yellow ones because they're not important. So when we come out this afternoon at 1:30, if this comes out at a 0.3 and this comes out at a 0.2 and this comes out at a 2.5, the dollar will do that. There's no reason for it to do anything else, because this is what we're expecting. If that's what we get, we have already made the move on the dollar in the previous couple of weeks or days, or however long it's taken us to get to wherever the price point is we expect it to be at. So we won't move it. If that comes out at a 0, that comes out at a 0, and that comes out at a 2.3, the dollar's going to go down hard. Yeah. So because the market has already factored in that we're going to get to these levels, it didn't anticipate it being worse than those levels. And if it is, they need to sell more of their dollar because interest rates are going to come down, or it would indicate that there's a chance that interest rates are coming down. This is a leading indicator. It's trying to predict the future. So they will sell off hard because their balance of their portfolio is expecting the dollar to maintain stable on these numbers. And it doesn't get them, it has to adjust. So the big moves that you get in the market on news are caused by bank and institutional repositioning of their portfolios. Don't forget, they are always in. So they are always long or always short. They are never flat. So they've always got an exposure on every single currency. And their job is to balance that portfolio and that exposure to make sure that they're constantly sitting in the green. So when the market gets news that it wasn't expecting, it has to quickly adjust its portfolio to be in line with future predictions of price movement. Therefore, it has a big move. This is why we get these spikes. Look at the pound yesterday. Again, I'm not sure the pound yesterday, yes, it was a big move, but it wasn't on a high impact news event. It was a very big deviation, but I think this is more because they're worried about what's going to happen today with the news coming out of Rachel Reeves. But either way, it was a big red number. Wasn't what we were expecting. That's the reaction that we got. Yeah. So these are your main leading indicators, which are interest rates, inflation, GDP, unemployment, COTS. Not so much at the moment because the commitment of traders is less important because of tariffs. And it's been less important, I think, over the long term anyway. But commitment of traders is basically the futures positioning. It's the futures, the Chicago Mercantile Exchange publishes the positions of all bank and institutional, non-commercial and commercial orders so that you can see whether the market is long or short. That is at the moment a short-term view rather than a long-term view, and it's also delayed by a week. So it's a lot less important because this thing's changing every day. So that is less important than it used to be. But these are your 4 key leading indicators. So interest rates, if they are high or going up, it's good for the currency. So that will accelerate growth in that currency. Inflation is it's a bit of a double-edged sword, but if inflation goes up, it means that they will want to increase their interest rates, which means that tends to be bullish for the currency as well. If inflation is coming down, it leads to dropping interest rates to encourage spending, which is basically the balancing act that they play all the time with the central banks. GDP, it's positive if it's higher, it's negative if it's lower. So if your GDP is going up, it means businesses are doing well. That attracts investment, which makes your currency stronger. Unemployment, if it's at high numbers, it's negative because it has a bigger burden on central government and it costs more money. And also it slows down economic growth because if you have high unemployment, it usually means businesses are struggling because they're laying off staff, which means that your economy is dropping, which means that you are less attractive financially. So all these do basically is when you get these numbers coming out bigger than expected or smaller than expected, these are the 4 that really put those 100, 200 ADR days in. Yeah. So look at yesterday. That was not a high impact news event, but that move there that we got was 89 pips. 80 is ADR. So we did over an ADR in 2 hours on something that is actually quite medium impact. So if that was an inflation number coming out way different to expected, like CPI this afternoon, or if it was an interest rate that they said they were going to drop interest rates, or they said they were going to freeze interest rates and they decided to drop them, you will get a 200 ADR move, which brings me on to the next part. Trading those. If you get a massive drop on news, one of 2 things typically happens. It is either a fake move and the analysts will reanalyze the market and go, actually, that is going to get cancelled out by this next week, we do not need to worry about it. Or you will get something like a flag break and then a continuation, which will typically last for days. So this is where I talk about fundamental shifts. Yeah, you hear me say quite often in the live rooms, ADR reversals are a really good strategy unless it's a news event that caused the fundamental shift. And the fundamental shift is basically an unexpected news result. So when we get 33.1 and we're expecting 9.5, that is a fundamental shift. We have got much worse than anticipated. Therefore, that makes that currency bearish. Short term is anything less than a week. So what you can do is basically short it when you get that news event and hold it for a few days. And you would expect the currency not to recover from that most of the time. And the bigger the deviation between the forecast and the actual result, the stronger and longer that move will happen. So when we see interest rates and CPI numbers coming out dramatically different to forecast, you will see a multi-day move where the market will just go and it will then keep going because banks and institutions will be continuously readjusting their portfolios until they are happy with them. And that will create market structure that goes on and on for days as they are basically going, we need to buy more dollar. So we'll buy more dollar. We'll wait for the price to come back. We'll buy more dollar. We'll wait for the price to come back. Are we balanced yet? Do we think we're about where we should be on the dollar? Yeah. Okay, brilliant. Then we sit around and we wait for the next news event. And the next news event, we will forecast to be positive or negative. And then we will move either that way or that way. Yeah. And readjust again. And then when we get that news event, it will either be right or wrong. And if it's wrong, it'll do that. If it's right, it will do that. Because we've already factored the move in. We've planned the move. So banks are always trying to stay ahead of news events and forecast what they think is going to happen with all of these numbers. So that's basically the upshot of fundamentals, how they work, why they work. The caveat with all of these is they are not 100% reliable when there are other factors. And as you can see at the moment, we've got this guy. There are other factors at play. So in a normal market, whatever you want to class as a normal market, but a normal market where we have fairly stable government, we have fairly stable world events, the market will be driven pretty much 100% by fundamentals. The problem with fundamentals is there is no time frame on them. So with things like CPI, they come out once a month. Yeah. So the banks and institutions have weeks to execute orders, usually in the direction of where they think the CPI number is going. But because each of these news events affects the other news events and they all lead into each other, you will find that the outlook on this is constantly changing. We only get given the forecasts, really, the week when these are coming out. The banks and institutions analysts will be producing these numbers on a daily basis. So every time the GDP number comes out, or the PPI number comes out, or the Michigan number comes out, that will affect what their forecast for inflation is going to be in 4 weeks' time. So we can't see under the hood the evolving market overview of where they think things are going. But what you can do is use it to your advantage in the fact that if you get a negative news event on CPI followed by a negative number on the PPI followed by a negative sentiment on Michigan, you don't want to be buying the dollar, because there are three things there you can tell on their scorecards which are going to be saying we need to undo some of our dollar exposure because it's not going up. So they'll start selling the dollar off. Yeah. If they come out as that's positive, that's neutral, and that's negative, the overall weighting of those three will probably mean we just sit around sideways. Yeah. So red news is going to trump orange news, which is going to trump everything else. Trump at the moment trumps everything. Doesn't matter, does it? Whatever he says, it just upsets everything. So you need to kind of bear in mind, this is not a magic bullet. This isn't the holy grail of trend direction. It is a gauge. But the best way I have always found to use news is to have an idea an overview of, right, this is where we're going to be going long term. So this is my directional bias scorecard, which probably won't work because parts of this are deactivated now. Oh, it is still working, but it's really old. This is out of date by miles. So you can see here, this is how it's been scorecarded on this particular scorecard, which is a dumbed down version, basically what the banks use. So COT has at that time when I was building this and using this, it had a very high impact. So the commitment of traders, which is the futures market positioning on the currencies, was quite good. It was, if 80% of non-commercial orders in the futures market were longing the pound, pretty much over the next 4 to 6 weeks, the pound's probably going to go up because the entire market is long. So you go with it. Retail sentiment is another thing that's important. This is a much shorter term measurement. So if the retail traders are all shorting, they are usually wrong, which means that they are trying to fight the stream, basically. They're a salmon swimming upstream. It's not going to work. So if the retail guys are all going short, you can be pretty sure the banks are going to take it long because they will be looking for liquidity, and liquidity is always in the opposite direction to these guys because 80% of people lose money. They have it wrong. So they get the direction wrong, which means that the banks typically go in the opposite direction. The banks don't care about retail traders, but you can use it as a gauge to say, right, if the market's doing that, they're probably wrong. Yeah. Because the banks are going that way. They're all trying to mean revert against an absolute steam train. That is what most people tend to do, isn't it? So you can see there, you've got a -2 for retail. You've got a +4 for COT. The unemployment rate was giving the Aussie New Zealand a +1. The unemployment change was giving it a +1. There's a 0 for GDP change, a plus for GDP. At the end of the day, you come out with a 4, which is bullish. Yeah, because it's bigger than 0. But it's not massively bullish. Yeah. So if you go down here, you've got other numbers down here. You've got a -7 on the New Zealand US. That's a big sell. So what these numbers here are is an aggregation between those two. So if you look at the all of these combined, basically, what we're looking at here is the New Zealand and the US. The New Zealand will be given a score of X. The US will be given a score of Y. And the difference between those two gives you either a positive or a negative. Yeah. So when you get two currencies which have very similar figures, like euro yen and pound yen in this particular case, they come out as a 0, which means that the pound might be having really good numbers on something, but the yen is also having good numbers on something else, which means they cancel each other out, which means that there is no expected advantage for either currency. So if the pound is dramatically weak because it's had bad numbers and the yen is dramatically strong because it's had really good numbers, the pound yen will be expected to drop. And this is what these numbers are. This is what the scorecard gives you. And in banks and institutions, this will go up to something like 150 because they're monitoring all news events and they will have a much more macro gauge, which gives them directional bias. Yeah. So the way to use this information is basically when you get a differential on news, like we had yesterday, for example, you would tend to go into a sort of medium to long-term sell. So this is a bit of an anomaly, this one, but equally, you want to look at this and go, right, well, it was a big negative number and you can see a big negative news. So move. So there's two ways you can play it. One is as soon as the news comes out and it's negative, you jump in. Yeah. So that came out at 7 a.m. yesterday. And that is 7 a.m. yesterday. 7:20. That's 7 a.m. yesterday. So as soon as that news comes out, you hit the sell button. But you can use a stop, obviously. It's entirely up to you with strategy on this sort of thing. But if you use a stop loss, the obvious thing to do is just stick it above the recent high. So this is where the news event came out. Realistically, you're not going to get in until somewhere around here. So you put a stop loss up there. And if you want to play intraday, you look for a target of 2 or 3 or whatever are. And when it started moving in your direction, you break it even because the likelihood is it will pull back a percentage because with news, it's very sentiment based. It's very discretionary because what it is a knee-jerk reaction. The analysts need time to factor that news into their systems, their scorecarding, and what they think is happening elsewhere to be able to come back to the FX desks and say, right, actually, you did the right thing there. It is negative, but it's going to be countered by this if this news event comes out in this way. So actually, we're not going to continue shorting it. Then we get your V-shaped or your A-shaped recoveries. If they come back and go, yeah, definitely looks like we're going to have a weak pound because we've got these two forecasts coming out as negative in the next week, we definitely want to be undoing some of our position on the pound, you're going to get a continuation. So what I prefer to do, and which is what I did with this exact trade, is get in short and just sit there and hold it. So do not get in with 1% risk. Get in with a small amount of risk and just sit in it and look for it to continue for 2 to 3 days into the future. Yeah. So if you short it here, you can either get out at the end of the day and say, right, brilliant, we did get a negative day because of the negative news. If it's come up, you could get out there and go, I took a loss. Or you can hold it for multiple days. So in this particular case, if you shorted it there, you would sit in it, and then at the end of the day, you would go, it's in profit. I can either protect it, or I can hold it, or I can take it. It's entirely up to you. But if this news event is going to be a continuation, tomorrow should also be a down day. And then if they get more negative news, the next day will be a down day. And they can be the start of trend direction, because these are fundamental shifts. So if the market was sitting around going, I have no idea what to do with a pound US dollar, or all of a sudden the pound gets negative news and then the dollar gets positive news, you have just caught the top of that trend. And trends start because fundamentals shift. This is potentially the start of a fundamental shift. The difficulty is trying to get into it and stay in it to capture that big, strong move. I'm not a trend trader. So, this isn't my be all and end all main strategy, but it is a strategy that works very well a number of times. But the problem with it is, with trend trading strategies, they have a strike rate of around about 33% or 30%. Reason being is because the market spends 80% of its time moving up and down and not knowing where to go. It spends 20 to 30% of its time actually with a directional bias. And those directional biases are always started with news. So these are the types of trade that you won't get very many opportunities to take. So looking at this week, for example, we had one news event yesterday, which, to be honest, you probably wouldn't be sitting there going, oh, this is going to be a big one. It turned into a big one. By the time you'd realized it was a big one, you probably would have missed half of yesterday's move because you weren't expecting it to continue and go that big. But it was a big miss, yeah? If you look at previous forecasts and where we tend to go with them, you got another one there, look, 44 on a 7.9. So on March the 20th, 2025, let's go back there. Let's go back to March 2025. What date was it? March the 20th. So 20th of March 2025. There we go. So that was your next one, or the previous one, which was a big miss, yeah? And as you can see, the market reaction on that day, which was here at 7 o'clock, was pretty much the same. Look, bang, there's your 7 o'clock candle. It's actually not there. It's a little bit later, but that's your candle there. That was the news. So the market had already sold into it beforehand. Again, this is a good indication the market knows what's coming, or is planning what is coming. That is where your news event hit. You had a big move down. ADR is 80 odd on this. So you had a move down of 50. So about 3/4 of an ADR removed to the downside. But look at the next day. And then the market after that, it was held down. Now you could also have at the same time positive news on the dollar. And this is the other thing that you need to bear in mind. If you get a big negative move on one currency, and then the following day you have got another currency which you are crossed with that is coming out with another news event, that one news event on the dollar, if it was massively negative, would undo the pound move. Because if there's a negative move on the dollar, the pound US dollar goes up. If the dollar has a positive move, positive news event, the pound has the negative, then the dollar has the positive. You're going to get double the strength, yeah? So part of the key to trying to trade these news events is picking something that has got no news coming up. So for the pound, for example, if you were going to trade that as a news event, you would say, I want to cross the pound with something that is not the dollar, because the dollar, well, you could look at it in the other way, actually. It depends how aggressive you are. But the dollar is coming out with some news events. So if I go short on the pound because we've got negative news, there's 3 instances in the next 3 days where the dollar could undo that move. Equally, there is chance for opportunity. There are 3 instances in the next 3 days where the dollar could enhance the speed of that move. But if you were to cross the pound with something like the euro, which has got no news coming out, and the pound is going to continuously weaken, there's nothing to make the euro drive against the pound, which means that will get a really good, strong move. So, there's no real way of picking the currencies, but you need to be aware of what's coming up afterwards. So if you'd have taken that trade yesterday and you've shorted the pound US dollar like I'm short at the moment, I need good, strong US dollar CPI numbers. I want this number to come out at 0.4, 0.3 and 2.6 today. That is going to drive that dollar through the roof, which is going to drive pound US dollar down because the pound is already weak and the dollar is strengthening, which drives it twice as quick. Yeah. So be aware when you're looking at the news of what's coming up. So that Bank of Japan rate we get coming out next week, the forecast is probably going to be a 0.5. They're probably not going to change it again. If it comes out at 0.75, yen's going to rally. So you want to be shorting the yen. So you can pick a pair that is with the yen on that day, if that news event comes out as either positive or negative, and cross it with something that you know is maybe going to impact it a little bit more. So the pound CPI, let's say, for example, that is forecast to come out at 3.4. We would expect the pound to weaken on that. If the yen suddenly gets a 0.75 interest rate, which strengthens the yen, we would say, right, well, the pound has got a forecast weak move coming on Wednesday. So we'll take the pound yen short. Yeah, so we'll short the pound against the yen. So when the yen strengthens, we short the pound yen. When we get to Wednesday, and that comes out as expected, that will weaken the pound further. The yen is still strong. So that will move twice as fast as if we'd gone with something, for example, like the dollar. Let's say, for example, they were going to increase their interest rates to 4.75. That would make the dollar strong. So you wouldn't want to short the yen against the dollar or the US dollar yen, because you'd know that the yen is going to strengthen up, but then the dollar is going to strengthen back up on Wednesday and undo that move. You want to pick something you think is going to be weak in the future. And this is what banks and institutions are doing. When they get into currencies, they're looking at what is strong, what is weak. So if you've got something that is strong at the moment and forecast to get stronger, you want to trade it against something that is weak at the moment and forecast to get weaker, because those moves are going to be faster and stronger, which means you get those parabolic trends. So pound New Zealand with a +6 is the strongest thing at the moment. So the pound is very strong at that time. The New Zealand is very weak, which gives it a high score, which means you only want to look for trades long pound New Zealand. These might play out over a period of weeks. But for position trading, if you can put yourself in alignment with what is forecasted on the fundamentals, you're going to be a lot safer. And this is why I built this scorecarding system. The problem with it is, if there is a fundamental shift, for example, on the pound New Zealand, this could, within 1 week, turn from a +6 to a -2, because the pound could expect to keep interest rates the same and suddenly drop them. The New Zealand dollar could keep its interest rates the same and then suddenly increase them. And it completely shifts the bias of the pound New Zealand dollar in the opposite direction. So if you take a position trade only in line with these, you need to be aware that it's not the holy grail, as I said earlier. If they change their interest rates, their CPI figures, if all comes out as not forecast, you get a fundamental shift. And that is where you get parabolic moves started, squeezes. Yeah, squeezes are started always by a fundamental shift in the market, an unexpected result. The pound, my God, have you seen their GDP figures? It's collapsed. We've just been downgraded by central banks. That's not good. Sell the pound. Yesterday, the pound was flourishing. Today, the pound has changed. It changes every day, which is why this is so important. And it's why it annoys me when people say in Discord and Telegram, have you just seen that move on the dollar? What caused it? If you don't know what caused it, you shouldn't be trading. It's caused by this. This is what moves the market up and down on an intraday basis. Bank and institutional money flow based on directional bias, based on speculative movement based on what they need to do every day to make money. Banks and institutions are there to purely make money. Their purpose in life is to take money, increase it into more money. They do it by knowing where things are going, or long-term movement forecast on where things are going. Yeah. So we have to pay attention. The new version of this, which I've been building, I've been working with some guys, I think I mentioned last week, on a new website that's launching. And they have a scorecarding system that they're putting into place, which allows you actually, I'm not sure how far they've gotten it yet, but it allows you to fine tune it. So you can set up your own scoring system for this, which is going to be brilliant. Although I think it might be something that you'll just get sucked into and keep playing with numbers, and one of those things where it's got too many buttons. But anyway, we'll see. But it's a really good way of getting into these opportunities. So for example, today, let's say the CPI number comes out and we've got one red, one black, and another red. Yeah. So it's overall bearish. So we've got three numbers there. Two of them come out as red. One of them comes out as black. Hit the sell button on the dollar. Give yourself half an ADR to a 3/4 of an ADR move before you think about stopping yourself out, and just hold it for the day. Sit there for the day. And then this evening, look at where the dollar is. If the dollar is below where you entered, you have a choice. Take the money, or you can hold it and assume that we are going to get a continuation move tomorrow, because it's not what the market was expected. They have had to sell some of the dollar. And tomorrow, if those PPI numbers come out as negative, you are going again for another ride to the downside. So the further you can get away, and this is a beautiful example this week, if you get a negative here, for example, or a positive, whichever way, and then it's followed by another negative, it's going to be very hard for the market to get back to your entry price, because they've had a down day, which has been exponentially moved further by another down day because of downward news. If you put a break even on that, it's got to retrace 2 days worth, probably 2 ADR, just to get back to your entry. If that comes out as positive on Friday, you will probably get a retracement. But chances of it getting a whole V-shaped recovery all the way back to your entry is not really practical. I mean, it's got to be a massive University of Michigan shift. And the market is very random on that anyway. But you know, you've got something where you can hold it for a long period of time. But entering on the news and exiting end of day, whether you're in positive or negative territory, is not a bad strategy either. And that is what I do quite often. Just enter on the news when you get the news. And I quite often like to wait for that first 5-minute candle to go in, and then I take a break of that short. So it's a little bit like the ORB strategy I like to do. Just wait for the first 5 minutes and just make sure that the market isn't doing some kind of fake out move on it, and it's going to just fly back the opposite direction, which it does. And then try and get in the direction of the news, and then just stay in. And if it comes back up and you're up half an ADR in drawdown, you can get out. But if it moves your way, this is where you're going to find ADRs. Yeah. So when the ADR dashboard on news days is lit up like a Christmas tree, we're talking 100 ADR, 125, 150 ADR moves plus, and they can go on for days, can't they? So if you stick a half an ADR to a 3/4 an ADR stop loss, or, you know, if you want to have a maximum line in the sand stop loss, or if you have closed by end of day above that level, shut it out. The chances are the ones that do work, because there is a fundamental shift and the market does want to move for a couple of days in one direction, they're going to far outweigh that half an ADR movement, because you're getting ADRs, aren't you? This is where we get this lighting up. Something's happened. We, you know, number of live rooms we've come in the morning, and the Aussie dollar pairs have all hit ADR, because the Asian session is where the Australian news and New Zealand news comes out, and the yen news, and we suddenly find all the Australasian pairs have hit ADR before we've woken up. Yeah. Go with those ADRs. Don't try and mean revert them, because there's a good chance that is because of a fundamental. So look for pullbacks to go long on them rather than trying to mean revert them. But something that doesn't have a news event and hits ADR is usually caused just by large institutional movement, which will then get undone. A portion of that will be profit taking. And that's where your ADR reversals work, when there's no fundamentals behind them. Yeah. So there you go. So that's what I wanted to cover. So good sort of task that you can do is to go back in time, if you like. So pick a news event on a currency, whichever one you want to do, and it's a really good exercise to do. So I've just used this one as an example because I've got 2 of them marked up already. But go back and look at these dates, yeah? So just go back and do sort of 6 to 8 news events on anything you want to. Just pick anything. But you've got the dates there in Forex Factory, yeah? So the 15th, it always comes out at 7 o'clock in the morning in this particular case, and they'll always, you know, if it's 1:30 in the afternoon CPI, it's always 1:30 in the afternoon. So go back and look at what the forecast was. Forget the previous. It's a lot less important. What we're looking at is the deviation on the forecast. Look at how much the deviation was. In this case, it's about sort of 17. That one there is about 13. That one there is huge. It's about 33 or something. Yeah. So look for the ones where it's a big number, big deviation, so a big differential between the two, and whether it's red or green. So red means it's negative for the currency. Green means it's positive for the currency. Look at the big ones, mark them on your chart and see what happened intraday, i.e. when the news event came out at 7 a.m., did we close down when it was a red day? Yeah. Yes. +1. Yeah. No. -1. Yeah. And see how many times you would make money and see what the strike rate is on them. But more importantly, look at what happened the next day and the next day. After this, did it continue to move down? If it did continue to move down, that is a multi-day hold strategy. And that is where you're going to make the most money, because if you're not using a stop loss and you're just deciding to get out at end of day, these losses are going to be a variable, and so are the wins. But the wins will be a much bigger variable than the losses will, because your downside loss at end of day, if it's a negative news event, you're going to find it very hard to move an ADR against your position, yeah, on a news event that is negative. Yeah, it's not going to move up by 1 ADR most of the time, unless there's another news event on the day that made that cross particularly go in the opposite direction. But you'll need to look at that. But yeah, so work out how many times it went against you and how many times it went your way, and you'll find that not 90%, I'm making numbers up, but the majority of the time, if it's a big deviation, you're going to get that drop. But this is an unknown. The distance is always an unknown. It's always a variable. So formulating a strategy and backtesting this is very, very, very difficult to do. I've tried to build backtest engines to do this in the past, and it's a very hard thing to sort of quantify. And again, the guys that are building this website are looking at ways to do this by taking all the news events, taking the historical price action and doing ADR calculations from the time of news. So this is part of the stuff I've been working on with them, is to put a database together of all this information so that traders can basically look it up and go, right, if I short it, what is the edge intraday and 2-day and 3-day? So, you know, all this information is very, very useful, but it's not the be on and end all of strategy, because you've got multiple variables. You've got the pound, and then you got the following day, you got the dollar. So if you short the pound and then it went down the next day as well, did it go down because of that pound move, or did it go down because of a positive dollar move? Yeah, there's a lot of variables that happen, because every single day has got new news events which are going to affect every currency pair in a different way. So you can't say that it dropped for 3 days on the trot because of that. It dropped for 1 day on the trot because of that, but the other 2 days it dropped because of positive US news. So what if that US news had actually been negative? It would have gone the other way, which means that trade would not have been a good one to hold multi-day. You should have got out end of day, another variable. But we're talking about initially getting ourselves into trades. Remember, the reason you get into a trade is not what makes you the money. You need a reason to get into a trade, and that is a good reason to get in short. However, what happens afterwards is not in your control. The market pays you what the market wants to pay you based on the market movement. And the market movement is determined by fundamentals. You can't control that. So it's a reason to get in, but you can't really backtest it and go, oh yeah, every time this happens, that happens. So you can't give yourself any degree of certainty. But you do know that if it comes out as a big negative, it does that. And you can prove that to yourself by looking at all these past events, plotting them on your chart and seeing what happened every time one of those happened. Yeah. And if you see that every time that that particular news event came out, the market dropped, but sometimes it dropped by 1 ADR in 2 days. Sometimes it dropped by 3 ADR in 2 days. What's the common factor? It dropped. So it gives you a really good indication of directional movement. But targets, stop positioning, they are all variables. You cannot specify those by news. You have to look at where the market is. In this case, when that news event came out, we had downside resistance here. Yeah. So the news event came out, it drove it down. It came back up. The next day it drove it down. And then it got down to a level where we hit a load of previous buyers. And it bought, and it bought, and it bought. Why? Because it's in an uptrend. So it's one negative news event fighting an uptrend. Yeah. Which is likely why this happened, because this is where the supportive buyers are. Yeah. And again, if that news event had happened and this low was down here, you may well have dropped 3 ADR within 48 hours. But there's too many factors to be able to say this is what you should use as a risk reward ratio. This is what you should use as a risk. This is what you should use as a stop, anything like that. It's a case of give me an idea where I should be going. Let's see what happens. Yeah. So it's a shotgun approach, but it's a shotgun approach that the banks use. So it's a good one. Any questions on that? Anybody still here? Anybody still awake? I have to ask because the chat's always very quiet in member streams. God, hedged. So long the DAX, short the FTSE. This market is all over the place. Still awake, FTNet? Good. So yeah, long DAX on the 30-minute range break and short FTSE 25. So on the 15-minute ORB, short on the FTSE. I don't hold up much hope for today. This is the trouble. We are getting these markets pushing and pulling each other in different directions. You don't often see one of them collapse while the other one pumps. They usually go kind of roughly in the same direction, don't they? So it's going to be hard, again, to extract money today, I think. One is fighting the other all the time. It'll pop at some point. When it does, it'll be good, but good at the minute. Right, so there you go. So that's fundamentals. So that's basically, in a nutshell, kind of everything you really need to know. There is a lot more information you can go into on fundamentals. So if you've got any questions, I'm happy to answer them. You can always ask in the members group in Discord as well. Just go and do the research. There's lots of different ways people formulate trading plans around news. I know Tom Hugard has I think it's a non-farm payroll strategy or something, where you wait 45 minutes after the event or something, and then you take a break of a 15-minute range or something. Yeah, so there's lots of ways you could get in, but there's nothing really that will, I don't think, give you any real advantage. Yeah, if it's a negative news event and the market is offside on it, they're going to sell it. How you get in is entirely up to you. You could wait, you could get in immediately, you could wait an hour, you could wait 2 hours, you can do whatever you like. But at the end of the day, the consensus is it should be going in one direction. So that's really all you can use news for, the fundamentals. I don't think there's any way you can look back in time and say every single time this happened, if I'd have waited for candle X after the news on X time frame, Y would have happened, because the market is random. It's too random for that type of thing. Yeah, but you could always say things like, if we got a news event, I'm going to wait for the bear move to be over, and as soon as the bear move is over and we get an inside bar, I am going to break that inside bar. Yeah, so there is your outside bar. There's your inside bar. So I'm going to take a break of that inside bar, or I'm going to take a break of the outside bar. Yeah, that's a strategy. Yeah, so the market got the news. It went, holy crap, we're wrong. And it got down to here. So I'll wait until they finish selling the crap out of it. And then when we're in indecision, I will wait for them to decide whether they want to sell more or they want to undo a portion of it. That's a strategy. Very easy, isn't it? So it's just basically after news event, wait for inside bar, trade inside bar break. Job done. Yesterday it was a long. But if it's a fundamental shift, what you'll find is probably a stop out, and then you would need to take the short. So you might get one, like ORB, you might get a stop out on one and then trigger on the second. And if the second works out as it should do, there's your trade. But for me personally, I've never got too complex on it. I have always just hit the button and sat there and waited. And exactly what I did, and this is, as I said earlier, why I'm in this trade. It was wrong, totally wrong. Yeah, that news event, in my opinion, should have caused that. Unfortunately, because of him, we have a different scenario. Yeah, so it didn't play out. So it was designed to be a position trade, V-shaped recovery, continuation short. That happened to be, for me, the turning point. So that fundamental was outmaneuvered by another fundamental the following day, which sent the market back off in the other direction. This is a great example. That was massively bearish, but then we had massively bullish US news coming through afterwards, which outdid all the bearish pound news. Nothing you could do about it. Yeah. So what you should have done, or what you could have done, is go, okay, I'm shorting this. I would have exited there and gone, we hardly got anything out of it. Or the next day I'd have gone, exited it. Now, because we've had positive news on the dollar, I should be now buying, negative news on the dollar. I said that the wrong way around. Negative news on the dollar. I should be buying the pound. Yeah. And then that trade would have worked out, wouldn't it? But how long do you hold it for? Highly likely, I would have got scared out there. And if I didn't get scared out there, I'd have definitely got scared out there. Yeah. 2 days, we couldn't break through the monthly high. I'm out. Yeah. And this is the bit that you will never get right, the hold. Can't do it. You've got no way of knowing. So it's the get in. Yeah. You could get out the following day with a little bit, or it would have gone into drawdown, and then you'd wait for it to pop into that high. You've got a choice of either taking the profit and protecting yourself at break even. You've got a big propulsion buffer there, look, which it held. And then there you would go, nope, that's not getting through there, is it? So let's lock in 1R or something, or lock in X amount of pips, and it would have worked. There's a million things you can do after the trade, but this is all about getting into the trade. The reason why. RSIs extend to the upside, short it. Just had positive news on the pound, long it. Yeah, so it's your entry reason. It's not anything to do with risk reward. It's just a reason to go, I've got a long bias now, or I've got a short bias now. That's what fundamentals should be used for. There you go. So I'll wrap that up there. All done. As I say, if you've got any other questions, let me know. But go and do that exercise whenever you get a chance, and just, prove it to yourself. And you will also disprove this theory as well. So you will go through these and you will go, but that's a negative and it went up. Yeah. There will be other things at play, which will be, we had a negative and it went up because X, Y, Z. There'd be something coming out later, or something that came out the previous day, which means that is now actually not negative. It's positive. And again, this is where you go deep into the economic side. And, for me, step too far. I don't want to become an economist. If I did, I'd go and get a job in Barclays, because they pay 125 grand for analysts. You need an economics degree, though. So, a bit old for that. Right, I'll leave it there. Let's just have a quick look if anything's moved today while I've been waffling. No ADRs, nothing new on RSI. Yeah. So we'll see where we go this afternoon. So I'm back this afternoon at 2:30. We'll obviously do the same thing this afternoon. Just don't look at the markets, trade as usual. 1:30 is CPI though, so it's a big one this afternoon. Potential for some very large movement off the back of this one. So yeah, keep your eyes peeled on that, and I'll be back at 2:30 and we'll have a look at what the outcome of it is. Anybody got any questions before I go? Everyone's very quiet today. I really hate not knowing how many people are in here. I need to have some kind of poll going, because it's I don't know why they don't put viewer numbers up. It's very annoying. All the normal streams I can see the viewer counts, but on these you can't. Anyway, Right. No one got any questions? No? Good. Well, not good, but that means I've explained it. Or you've gone, I didn't understand a word of that. One or the other, isn't it? Right. If you have got any questions, I'll be in Discord. Otherwise, I'll be back this afternoon, so you can ask me then. All right. Have a good one. Anything you need, let me know. Other than that, I will see you hopefully this afternoon. If not, I'll be back Friday morning, 8 o'clock. All right. So have a good day, and I will see you next time.